All right, let's now talk about supply and demand levels. All right, supply and demand levels are very important. Um, why? Because those are the levels, or those are the institutional levels where big institutions, banks, hedge funds place their orders. So it's very important to know because we try to follow the banks. All right. So how do we know we have a demand level or a supply level? First thing first, we need to identify. We need to see if we have strong movements, strong and fast movements, accelerated movements. That is very important. Why? Because this tells us that a huge institution, someone with tons of money, place an order here, either a buy or a sell order. So when we see a movement like this to the upside, very strong movement, very fast movement, this is telling us that someone with a lot of money bought here. All right. So that's like the first thing. We need to train our eye to identify this movement, these strong movements. So how do we do it? We need to follow some rules. What are those rules? These movements, a demand or supply levels, will have a base candle, which is the very last candle before the movement, either to the upside or to the downside. Let's use this green. Okay, good. So let's say this is our base candle, and then we have the explosive move to the upside. This is our green candle. All right, try to follow me on this one. And then it has its wicks. Okay, good. So we know this is a strong movement to the upside. We know that someone very important bought here around this level. But how do we know this is a valid demand zone or a valid supply zone in case it's the other way around? The base of the candle, the base candle here. The base candle must be able to fit in the explosion of the movement at least 3 times. At least 2 times. For instance, this candle fits here. There. 2 times. That's good enough. If it fits more than 2 times, that's much, much better. As you see, this movement, the base of the candle fit 5 times, around 8, 9 times in the movement. Let's say that the movement is just like this. The base of the candle doesn't fit twice in the push to the upside. So that's not a valid entry. That's not a valid supply or demand level. That's very important. So number 1, we need to identify a strong movement to the downside. Number 2, we need to make sure our base candle fits at least 2 or 3 times in the explosion of the move. So for instance, let's use this Bitcoin chart. What do we have here? We have a supply level. All right. I mark from week to week. Okay, from week to week. So we have a supply level. This is my very last candle. This is the very last candle before the explosion to the downside, before this push to the downside. This is my last candle. If you want, you can take into consideration that this week is a little bit higher than the base candle. So we can use that wick then. It's valid. We can do it. But in terms of how do we mark, or how should we mark, all right, how should we mark our zones? That's how I do it. You can use body to wick. You can use wick to wick. You can just use the wick. That is up to you. However, I would recommend you to use wick to wick, because if we use body to wick or wick to wick, or just the wicks, we will miss many entries. Okay, so let's use this one. See what happened. We have a strong push to the downside that also breaks a structure. All right, see the break, and let's see if this candle fits at least twice. So let's see, 2, 3, 4, 5, 6, almost 7. So this is a beautiful level. This is a beautiful zone. Why do we do this? Because we don't want to fail into into a fake supply level, because we will see those cases. Okay, we will see those cases. So this is a valid level. We have a strong push to the downside, price retrace to the level, and then price, goes down again. All right, goes down again. Why? Because we have institutional orders waiting here to be filled. That's what a supply and demand level means. Okay, and that's why it's very important. We will use our supply levels, we will use our demand levels to place our orders. We will use them to place our orders, because according to the concepts, according to the theory, when we see a supply level or when we see a demand level, we have pending orders. We have a stock of orders here from institutions, not from retail traders, but from institutions, and that's what we need to follow. We need to follow the banks. So price reverse to the zone, orders are filled, and then price drops again. Okay, price drops again. So this is a bearish downtrend. This is a bearish downtrend. And if we do the same thing again, here we have another one. My last candle before the movement, this strong push to the downside made a new lower low. So we need to follow our checklist. We have a strong we have a strong movement to the downside, strong push to the downside. Number 2, the size of the base candle fits at least twice. 2, 3, 4. So that's good enough. This is a valid zone. And number 3, this is the last one, so we can identify valid supply and demand levels. It breaks a structure. Here, it made a new lower low. So this is the example for a supply level. That's how we mark our supply levels, and that's how we know we have a supply level. We have a demand level. Let's now use the same Bitcoin chart for demand examples. Let's see. We have here some demand levels. See, this is a demand level. Strong push to the upside. Highs removed. Now we have more demand levels here. See how this demand level here. See how this demand level created a new higher high. Now we have this other demand level here. See, strong push to the upside, new higher high created. See how strong the price rallied. See how strong it rallied. Then the price came back to the zone, filled my order, and then boom, it continued to the upside. So that's what we have to use. That's what we have to do. Follow these three simple steps, and that's how you can identify we have a valid demand zone as long as we are in an uptrend, or we have a valid supply zone as long as we are in a downtrend. See how we are combining both concepts: structure plus supply and demand zones. And we still need to see liquidity concepts. So let's continue. We have another demand zone here. Price rally to the upside. We have another demand zone here. Price broke that demand zone, and this starts telling us that the price is about to reverse, and it happened. Then we started to see a bearish trend. So that's how we use our demand levels. That's how we use our supply zones. And I'll teach you how to confirm also, like an extra confirmation, how to confirm these levels so we can take higher return entries. Are like 110, 112, 115, 1.8, and this will help us also to get better returns to our account. Because when I identify my trend, then I mark my demand zones, then I see what's the liquidity view, and then once price hits my zones, I look for confirmation so I can increase my return. And I know you have seen some setups I've shared. They are confirmed entries, but we will see them later. So basically, that's how we use demand zones. That's how we use supply levels. Just look for the strong movements. See, we have another one here that was never used. This level was never used. We have this one here also that was never used. Then we have this one here. There. See, it broke this structure, and now it broke this wick. And price keeps making more and more supply levels. In combination with the structure, that's how you get the best supply and demand levels. All right, let's move to the next class.